Hello folks, it's going to be a very important week in the markets this week because Wednesday is CPI day. Because of this, the start of the week will be quiet as traders brace for the volatility that will come on Wednesday right after the CPI report is released at 8:30 in the morning. So in this video, I'll talk about what this means for the broader market and SoundHound, and I'll give you my predictions for what I think SoundHound's share price will do for the rest of the week. And to finish off, I'd like to address the issue of insider selling because some people seem quite concerned by it. Before we begin, most of you are not subscribed, so please hit that like and subscribe button to get instant updates when I post SoundHound videos. And also, I'm not a financial advisor, so take all my content with a grain of salt and seek professional financial advice if you need to. So the CPI report for March will be released by the Bureau of Labor Statistics at 8:30 on Wednesday the 10th. The CPI report is important because the trend of inflation strongly influences the Federal Reserve's rate-setting policy. If inflation stays higher for longer, the Fed will keep interest rates higher for longer, which will hurt non-profitable technology stocks like SoundHound because the cost of capital rises. If inflation trends lower, then the Fed is more likely to cut rates sooner rather than later. This will help stocks like SoundHound because it makes it easier for the company to raise capital since it becomes cheaper as interest rates fall. So the market is expecting a CPI of 0.3% month over month, or an annualized rate of 3.7%. If it hits this number, I think the market will rally since it's lower than last month's number, which was 3.8%. If it comes in below 3.7%, then it'll be very positive for stocks because it means the rate of inflation is falling faster than expected. If this happens, we might see the NASDAQ rally 2 to 3% on Wednesday, and SoundHound should have a good day also. However, if we get a surprise to the upside and get something like 3.8% or higher, I expect the NASDAQ to sell off sharply, and it'll be interesting to see how SoundHound reacts. If the NASDAQ falls and SoundHound rallies, that would be a very bullish signal. I personally think that we'll get a reading of 3.8%, a slightly hotter than expected number. This is mainly due to ISM manufacturing prices paid coming in really hot last week. So I actually expect the NASDAQ to fall this week, which could actually be quite bad for SoundHound. But speaking of SoundHound, let's see what happened on Monday, and I'll give you my prediction for the rest of the week. So yesterday, SoundHound gapped lower and fell sharply at the open and recovered somewhat over the remainder of the session, finishing down more than 3%. I've been saying over the past few weeks that SoundHound has been consolidating and that I want to see the price hold the $5 level. We are just on the precipice, but if we get a hot inflation number on Wednesday, we might see a sell-off to $4. If that were to happen, I want to see SoundHound bounce straight back up to $5. Otherwise, it would mean that the stock is really weak and might fall further. Ideally, I would like to see SoundHound continue to just bounce around inside the bottom of this box on low volume and low volatility. If we get a good CPI number, I think SoundHound might finish the week above $6. But even if it continues to hug the $5 level for the next week or two, I'll be happy because SoundHound is still above all key long-term moving averages, which is bullish. Finally, I want to talk about insider selling. I've noticed in some comments, not necessarily in my videos, but other SoundHound videos on YouTube, where people are worried about insiders selling shares. If you look at this data, apparently 21% of SoundHound is owned by insiders. At the current market cap of $1.55 billion, that means insiders own $320 million of SoundHound shares. And guess how much of that they've been selling over the past 12 months? A pitiful $5.66 million. That's not even 2% of their holdings. $5 million these days might get you half a mansion in California. People need to understand that executives in American companies are mostly compensated through shares. They have a pretty low base salary relative to share-based compensation. A $200,000 to $300,000 executive salary doesn't go very far today. If these executives want to pay a $100,000 insurance premium on their mansion and $50,000 a year in private school tuition for their kids, they're going to have to finance that by selling their shares, and that's what they're doing. You can't blame them for cashing out to pay for living expenses. So I think this whole insider selling thing is a non-issue, and people are just making a big deal out of it because they've got nothing else to talk about. In fact, I would argue that there are far bigger things to worry about, like the macro environment. Are interest rates going to stay higher for longer? Is the consumer still spending money? Is the Fed going to kill the rally or keep it going? These are more important things to worry about, and don't forget, we're getting the Q1 earnings report in just a few weeks, alongside announcements of big client acquisitions in the restaurant space. So keep an eye out for those and watch what happens on Wednesday, because SoundHound's reaction to the market will be very revealing. Anyway, I'm still holding on to my shares, but I'm not buying any more just yet. I'll watch what happens in the next few weeks, which will be very exciting. Thanks for watching, and if you haven't already, please hit the like and subscribe button so you get daily SoundHound updates, and see you tomorrow.